Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, good morning, everybody. Welcome back to another live stream. Happy Friday to you. Hope you're doing well. Appreciate you, James, on that. Drop the link here for the DNA Funded, as you just got done seeing on the promo here to start the stream. Check them out if you haven't already. I've gotten a lot of positive messages from people who have been checking them out. So explore them if you are at that phase where you're ready, where you feel you're ready to take on the funding challenge side of things. Okay, so S&P, NASDAQ, these things are up here this morning. You got Dow Jones up 0.3, Russell's up 0.5. The DAX, actually take a look at this, guys. This is some relative strength 101. You've got the German DAX doing quite well here, actually taking out those previous all-time highs and trading to fresh all-time highs as we speak. Pretty impressive given everything that we've seen here. You know, if you'd told me that, I mean, look, this is a V-shaped recovery yet again for parts of the market. S&P 500 still has plenty of room to go, but I would say this is a pretty sharp and very strong rebound. And I've talked about this a lot here recently, but so many people were so convinced that that was not going to happen. So many people were like, this is sending us into a multi-year trade is going to break down globally and it's just going to get awful. And yet again, the bears got bearish at the worst possible time. We talked about that a lot yesterday. It's just something you have to be really careful about with markets is like oftentimes the market assumes the worst. And if you take that with you, it could be a very useful thing to know about markets. People, human beings, we typically seek out that worst possible scenario as a self-defense mechanism. But oftentimes in trading and investing, that actually can get you into a lot of trouble. So really important to focus on that. Ballout says indices are diverging and losing momentum. Yeah, I don't disagree with you, Ballout. I do think that we're due here a little bit for some corrective pullback. And I do think you have to be really careful with indices right now, simply because this weekend, we have such groundbreaking stuff set to happen. There is supposed to be this weekend, I believe, a meeting with the U.S. president and the Prince of Saudi Arabia, as well as a meeting between Trump and China. So, I mean, there's some big stuff happening this weekend. And when I say big stuff, that could be big positive. It could also be big negative. So just be careful out there because, again, if you're really bulled up on indices, and I am bullish on indices, I'm just saying if you're like actively buying it at this level, I would just say be careful because, again, you know, do we have good momentum here? We have excellent momentum. Momentum looks really, really strong. But let's not forget that we are still sitting at that 200-day moving average. And if you look closely here, you can see on the daily chart, we tapped that level just briefly, right? Just tapped into it and then saw a little bit of rejection. So I'm very curious to see how we close today because, again, we know we have really big news events happening this weekend. So over the weekend, we'll get some information. But the question is, going into this weekend, do we have a candle that looks like this? Do we have strength, confidence, feeling good about going into that? Or do we kind of cower away? Do we get a little nervous here and soften up ahead of that meeting? That should be interesting. But at the end of the day, we don't know exactly what's going to be said. I assume that if there is going to be a meeting, most of the time meetings are constructive. So I'd say that's probably why the market continues to push higher. But from a technical basis, you have kind of a decision point. You have a decision point at this time. Now, I'm not bearish at this level. I personally don't like the bear side at all. I think it is unlikely that bears are going to get some huge payout. We're going to take out the lows. I think that's unlikely. Could it happen? Of course it could happen. Anything can happen. Markets are uncertain and unpredictable all the time. People like to think they're very predictable. They're simply not. You can make educated guesses, but something can change that completely, and the perspective can all of a sudden be completely washed out. So we never know for certain, but we are sitting at a level of resistance. So I do think we have to respect that. Is it possible that we see a couple days down at this level? I think so. I think it's very possible that you get that. Would I bet on that? Nope, I would not. There's a difference between saying I think we're due for a bit of a pullback and saying I'm bearish at this level. So I'm not bearish on the S&P 500 or the NASDAQ, but at these levels, I do think there's a possibility we get a bit of a check from the bears, that we could come back to test some support, at which point, personally, I'd be looking for longs. So that's my opinion when I take a look at NASDAQ. Is we're sitting at resistance, that 200-day moving average. I do expect we saw it yesterday act as resistance pretty well. I'd be curious to see if we can get some follow through to the downside there and move forward with that. So again, I think that you're starting to see momentum pick up. Things look strong here in terms of momentum, but you are at a level of resistance. So I wouldn't be surprised if we get this kind of move. So that's my thought. S&P 500 is pretty much the exact same, except S&P 500 actually seems a bit weaker than NAS. You have resistance here, resistance here. I believe the 200-day moving average has yet to be hit. Let me just check. Yeah, 200-day moving average is up here. So if you do get a run up here in price today, I would say that the decision point would probably be around, what is that level currently? 57.70 or so. So I wouldn't be surprised if we make a run for that today. I'd be more surprised. I'd be pretty shocked if you had this move today. And in fact, I would say that's incredibly bullish. If you get a strong break and closure above the 200-day on the NAS and or S&P, I would say you're working with some real strong momentum. And don't get me wrong, momentum has already been strong. Things have been really impressive for the indices, despite, everybody getting so bearish. By the way, people are still bearish. I don't know what's going on with the EdgeFinder, by the way. I don't know if anybody else is having issues with Google stuff this morning. Maybe it was just me for a second. Maybe it's back. Yeah, I think Google stuff is having an issue this morning again. We had issues the other day. Google put out like a thing. That's frustrating. Well, some stuff seems to be working. Anyways, so what was my thinking there? I was going with something. Shoot, forgot it. But anyways, indices, like I said, they overall look really interesting. Later today, we'll get the COT data, which will be really interesting to see if that produces kind of a, like, what was the response? Oh, I know what I was going to look at. I was going to look at some sentiment data. So the latest AAII, check this out. You guys see this? Yet again, over 50% of respondents say they feel bearish. And I don't know if anybody else, I track this pretty close. I watch the AAII investor sentiment every week. And you know what I just found out? This is a record. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This is a record. 11 weeks in a row where people are saying they feel 50% or greater bearish. It's a record. So when I point that out, right, when we say that's a record, what does that tell you? That tells you that people are astoundingly bearish on this market. They're still really convinced that there's negative stuff ahead, that people are really, nervous about what the market's going to do. And meanwhile, as everyone's still so scared, the NASDAQ's up 23% from the lows. It's just amazing, like doing this for as long as I have, you just see these patterns emerge over and over and over. The crowd sentiment is oftentimes wrong, and wrong at the worst possible times too. Really crazy. But so when I look at that, when I see sentiment is still very negative, that actually gives me confidence that I think there's more upside for the market. Because what's going to happen eventually, in my opinion, is that deals are going to happen. And this number is going to go rapidly from 50+% bearish. It's going to flip bullish again at some point. And that process is going to be painful for bears who sold their portfolios and have to give up the bear train. Now, could I be wrong about that? Of course I could. I'm not saying that like, oh, I know for sure a market's going to go up and all those people are going to be proven wrong. But I've seen this story many times. And oftentimes that is what happens. Oftentimes people get bearish and they have to painstakingly cover their shorts for big losses and buy back their portfolios much more expensive than they previously owned them. That happens so often. And that is why most people believe strongly that time in the market beats timing the market. It's because most people who try and time the market do so very, very poorly. Now, timing the market is difficult as anything, but for the vast majority of people, like timing the market is not worth even trying to do because it's difficult. And you can see what timing. Look at this. People got peak bearish. Let's see. Peak bearishness on this list happened between March 31st and April 6th. Okay. If we go look at the chart for that, April 6th is right here. Peak bearishness was right here. Like that's where people said the market's going to crash. So it's just really important that we recognize that and learn that lesson so we don't become this crowd that has gotten absolutely destroyed. Right? Because think about this. And if this is you in the audience, I'm not trying to pick on you. I'm trying to just like, let's think about this. Let's learn from this. So people who sold their portfolios here, like if you're somebody who has a 401k or a stock portfolio, or you're just like you own a whole bunch of stocks, like I own a bunch of companies for the long term. The amount of, and I know this is agonizing for people out there. So I'm not saying this lightly because I've made this mistake. I'm telling you transparently, I've made this mistake before. It sucks. Selling your portfolio because the headline scared you. And then you look back and you're like, oh my gosh, I was the sucker. I sold stocks and panic sold just before the market ripped 23 freaking percent on the NASDAQ. And we talked about it at the time. I was pounding the table on this. And I'm not saying this like, oh, I knew the bottom was in. I'm just telling you, this is a lesson that so many traders are too arrogant to learn until they learn it the hard way. I learned it the hard way. So I'm telling you, don't make the same mistakes that I did. When the market freaks out, there is an expression that I think is really, really powerful in the stock market. If you are a stock index trader, a stock market trader, a stock trader, stock investor, whatever, there's an expression that has stuck with me for a long time, and is when the market has made this move, when you're looking at a market that's making free fall moves, the expression that I like is it's too late to panic. It's too late to panic. What are you going to do? You're going to sell stocks when you're doing the exact opposite of what every trader or investor claims they know what to do in markets, which is buy low, sell high. When the market freaks out, you can't freak out with it. You have to remain level-headed. That's what separates you from being just another, person in this crowd versus being an intelligent trader or an intelligent investor. What's up, James? Good to see you, man. Scott here. Good to have you here. So just think about that, okay? Sentiment has been something, it's been a theme that we focused on the last few weeks. It's a very important one. Today, we do get some important sentiment data from the other end of things, institutional money. We'll update here through the Commitment of Traders report. The software will automatically pull in this data this afternoon. So we'll have some information as to whether or not things like gold or the Dow Jones or the NASDAQ or the dollar, if these things got bought or sold, right? So we'll keep an eye on that this afternoon. If you have the EdgeFinder, just pull this open. Once this data updates, you will see it populate in the screen. I'm not sure what's going on with Google seems to be having some issues this morning. So I don't know if anybody else, for EdgeFinder users, the other day we were having some serious issues with EdgeFinder, and it was not EdgeFinder. It was like Google's servers, I guess, were down or something like that, but it all came back. Just sometimes that happens. So next week we have CPI. That's another thing I wanted to discuss here a little bit. And really quick, also, if you guys have a question for me, it's Friday, I'll do some questions. We're going to do some questions. I've been starting the stream a little bit earlier as a way to make some time for questions from the community. If you guys have a question for me and you would like to ask it, we'll drop a link here in the chat to where you can send us that message, and I'll be able to pull it up on the screen and take a look at you guys' questions. So here it is. Ask a question using this link. If you have a question, it's first come, first serve, and there's no questions in there currently. So if you ask your question and stick around, I will do my best to answer and help wherever I can. Okay, so next week we have inflation data. We have that on Tuesday. And when we look at inflation and we say, where are we headed, right? Let's see, do we have forecasts? We have forecasts at 2.4%. So forecasts are expected currently to remain unchanged in terms of a year-over-year inflation metric. We're expected to stay at 2.4%. The producer price index, let's see, we don't have year-over-year here. Producer price index expected to rise by 0.3% month over month. We also have Powell speaking next week. It's a pretty action-packed week next week, to say the least, with inflation metrics kind of front and center. We did get a dip in inflation here recently. This has been a good thing, largely in due part to oil prices being lower here recently. So we'll keep an eye on that. Oil prices staying low is an important component to this inflation story. If you do get a big rise in oil prices, it will likely increase inflation as well on a year-over-year basis. But we've got some good progress here recently. The question is now, we've had 1, 2, 3 inflation reports. I'm sorry, 2 in a row. We've had 2 inflation reports in a row that were lower than the previous. So inflation's been coming down, but can we get that 3 in a row? That's going to be really critical to get us closer. Can we get a 2.3, right? So forecast is 2.4. Can we get a 2.3? Can we get a 2.2? Can we get close in on that 2% inflation? Because guess what? If you get CPI at 2.2, like if you get a surprise lower in inflation, a June interest rate cut or a July interest rate cut seems very likely. What if you get a 2.5? Well, that would just be drama, because the expectation is that we get 2.4. What if we get 2.5? What if we get 2.6? Then interest rate cuts are not going to come, and that would be drama. So it's a heavy report. CPI next week will be very important to what happens next with interest rates. The Fed is looking at both, as according to their statement that they made here just the other day, or on Wednesday, right? Powell basically included in their the FOMC statement that there's an elevated risk now to both inflation and to labor data, right? Jobs. So they're looking at that and they're saying, basically, they don't want to say the word, but the word is stagflation. And stagflation is a really, really hard thing for the Fed to do. So let me ask the audience really quick. I'm going to get into some questions in just a second. Let me ask the audience for a second to think about this. If you have, ready? I'm going to map this out for you. Let's say inflation starts to rise again. Let's assume, for the sake of this discussion, jobs and inflation, right? What do you do if, and there is an answer that Powell gave that we'll see if anybody was paying really close attention. This is a good test for everybody in the audience. Fundamentalists who are aspiring, unite. Let's say, jobs data, let's say, is deteriorating. And let's say inflation is rising. Let me ask you guys in the audience, in this situation, do you hike interest rates? Do you cut interest rates or do you hold interest rates? Right? Think about it. You're looking at an environment. Let's say this is the new paradigm. I'm not saying this is where we're in. Powell made a point that there's a potential that we may be going into this environment. He said there's a heightened possibility. Jobs data starts to weaken. That's your first standpoint. Inflation data starts to worsen, meaning prices start to rise again quickly. What do? Do you hike, cut, or hold? By the way, our interest rate right now, 4.5%, is not historically super high or historically super low. However, the national debt is massive. So the US national debt, the administration wants to get that number down because that is crippling us. We need to get that down so that we can re-administer our debt at lower interest. We need to essentially refinance the entire United States national debt. That's the idea behind the administration. But what happens if we can't cut interest rates because inflation is rapidly rising? We can't cut interest rates into that. The grocery store, you'll go into the grocery store and come out with a coma, right? You can't cut interest rates into hyperinflation. Or you can't cut interest rates into inflation. That's how you get into hyperinflation. That's how you destroy your country. Okay, but what about jobs? What if people start losing their jobs like crazy? We need to cut interest rates so that businesses go out and spur the economy and hire and invest and keep the economy alive. I'm giving you guys this is not a relaxing Friday. This is super hard mode fundamental analysis, because you know what the answer to this? Truthfully, you listen to Powell on Wednesday, they don't know. They don't know what to do in that situation. The Fed rarely is in this situation. It's a rare circumstance to have potentially, and this is not our environment. Let me be clear. This is not the current environment we're living in. This is a risk that Powell discussed. If you get this environment, nobody's going to be happy. It will be ugly. This would cause serious market turmoil. Stocks would crater. That would be the biggest loser in all this, would be stocks, I think. Now, I don't think necessarily that we are in that environment. And I think that the possibility that that happens is not incredibly high either, but it's a possibility. So I didn't get a lot of answers to my challenge, and I expect that's because a lot of people don't know. And the answer is it's not an easy answer. Powell gave an answer to this. And Bulent, you did it, man. That's what I was looking for. Bulent was paying attention. That was my challenge to the audience, to see if anybody would get it. And Bulent, appreciate you. You did get the answer. So Powell gave an answer to this question. He said that when we intervene, or he said that we intervened when jobs hard data dropped too much. They'll do the same thing again. That is correct. But specifically to add on to this, here's what Powell really said. If we enter into this environment, what the Fed will actually do is they'll look at both of these things in terms of their magnitude of pain. Let's say jobs data is really bad. Like, let's say all of a sudden we have mass layoffs and unemployment rate rising dramatically. And meanwhile, inflation looks like this. Like, it's up, but it's not too dramatic. They're going to cut rates. This one wins, right? This is the winner in that circumstance. So they'll cut interest rates. This would be a cut scenario. And I think this is the best. This is the best that the Fed can give you in terms of an answer. I think he did okay with saying this. If the opposite is true, let's say inflation starts to really rapidly increase, but jobs data just modestly is down, then the Fed, what will the Fed do in that situation? It will have to hike, which would be no fun, but it would be necessary to get inflation under control. And it would be the exact opposite of the administration's goals. That would be a really worst case scenario for them. But actually, no, it gets worse. The worst case scenario, and very, very, very unlikely, so let me just clarify, I'm not saying this is a base case or likely at all, would be this scenario. rapid inflation, rapid decline in jobs, very rare, but that would be, in my opinion, potentially the worst risk to the United States empire. That right there. If you get significant, and this would require external things, it would require serious breakdown and stuff happening in the world, serious deterioration with China and with our allies. It would take something big to get us here, like big and scary. But if you had massive decline in jobs, massive increase inflation, I don't know what the Fed does. And I think that's the worst nightmare for a Fed chair and for an economy. That would be incredibly destructive and very unlikely, but always a possibility to think about. I don't know what you do in that situation. And I think that's why it would be so scary, because nobody knows what you do. What do you do if equally they're both massive problems, right? Right now, they're not both massive problems. So that's where you have to keep an eye on the economic data to not be trading blind, right? If you're just trading and you don't understand any of what we just discussed, I would encourage you to just think about that and go through some of the playlists on my channel that have discussions about fundamental analysis, so that you're not blindsided by, the serious things that can happen in markets and have happened in the past. Okay. I hope that was helpful to you. If that made sense, if that clarified something for you, can you just do me a favor and thumbs up the stream if you have not already? That will let me know that our discussion here was beneficial to people. I do always look at the like button count to get an idea. If you're like, oh yes, Nick, I want you to do more of what you just did, like the stream. That will let me know. Okay, you guys had some questions for me, and I am going to take a second to answer those. Let me pull them up. Chandler and James, if you guys could just double check that nothing inappropriate was on there. I'm going to pull them up on stream. But I'll just give you guys a minute to do that. And in the meantime, I'll start with the first question. Okay, so up first, our first question is from Matthew. Matthew's been trading 1 to 3 years. Their primary goal right now is to become a funded trader. Gold has been retracing recently. Do you think it will retouch all-time highs in the near future? So in my opinion, all-time highs are not that far away. All-time highs are a move of 5% in the upwards direction for gold. Do I think it is possible? Of course. Do I think it's probable? It is kind of just simply based on distance. It's not out of the question that we could go test those highs. Do I think at this time that we will see sustained momentum in the upward direction? At this time, no. I would actually give you, so here's a fair answer. You say, is it possible that we go test all-time highs? Personally, I would give it a 50% chance. 50% chance that we're here, 50% chance that we're here. I really have a pretty neutral reading on gold at this time. When we take a look at the EdgeFinder, the U.S. economic data has come in a little bit stronger here recently. We've been seeing signs of deals out of other countries. There's still a large amount of uncertainty. So there's kind of a bull and bear case for gold, and neutral reading on the EdgeFinder just going to tell me that I really don't have a strong opinion in either direction. So to answer your question completely honestly, I would say it's a 50-50. I don't see a strong bias one direction or the other on gold. Not to say it can't go higher. I just don't think that there's a clear setup for me on gold according to my system and strategy. You may have a differing opinion. That's totally cool. That's what makes a market. Okay, so let me see our next question here, and I'm going to just double check that we are good. I'm going to refresh, and then I'll pull up this on the screen. Okay. Whoops. Let me just do this. Ta-da. Okay. Next up. So we just did Matthew. Our next question is from France Carlos. How long have you been trading? Trading for less than 1 year. They own some of our software. They said, hi, coach. How are you doing? I'm Carlos, and I want to say thank you for your help. My question is if I want to be part of your team or to work with your project, because I need to be part in a good environment so I can grow and learn a lot to help others. France Carlos, I appreciate it. We are currently not hiring, but if we do make any sort of hiring, we do oftentimes source talent within our community. So we, I put out many things in the past of like, hey, if you're doing this, I might need your help. But currently we're pretty heavy stocked on staff at this time. I can't say your name. I will butcher it, and I apologize in advance. This person, we'll call him Far. Far has been trading for 3+ years. Their primary goal right now is to learn fundamental analysis. What key factors do you think are currently driving the euro dollar from a macroeconomic data trend, interest rate differentials, or geopolitical risk? I think all of them, as always, are impacting the price action in the euro. When we take a look at the euro, it's been in a recent uptrend, although recently a little bit stunted by the strength in the US dollar as trade deals seem to be coming down the pipeline. So there's geopolitical in the sense of trade negotiations. Trade is, of course, a huge impact on currencies, underlying economies, etc. The U.S. economic data has come in slightly better than expected here recently, specifically services and manufacturing PMIs, as well as NFP data. So a little bit of weakness there for the euro on that front. I do have a euro dollar long position, but I don't love it. And I'm considering just closing out of it because things have changed a little bit since when I initially took the trade. If I make any updates, I'll share that inside of our Discord. If you are not a member of the Discord, head over to a1trading.com/VIP. That's a1trading.com/VIP if you'd like to get trade notifications whenever I make an update. Our next question is from Graham. They've been trading for less than 1 year. They're trying to better understand how the EdgeFinder works currently. And their question is, hi, Nick, question about the EdgeFinder, how it calculates scores. I've been using the new economic surprise meter, and I noticed that pound is very high and CAD is very low, giving an economic score of 3. NZD on the eco surprise meter is lower than GBP, but it gives an eco score of 6 versus CAD. Seems slightly counterintuitive, so it'd be good to understand more about how the scores are calculated. Great question. So within the EdgeFinder, in terms of how we score economic data, we focus very heavily on expected data versus like what actually comes out. So consensus from analysts versus what comes out. And that sounds complicated, but it's not, I promise. Basically, we look at, let's pull up, let's see, what did you say? Like the pound. Like let's pull up the UK economic heat map, which just decided to give out today. So I think we're having some issues with the EdgeFinder this morning. They may be under some sort of maintenance. Let me just double check by refreshing, but I've been having issues with this morning with the EdgeFinder. So, well, there it goes. It's working now. Okay. So real quick, we look at something like forecast for GDP growth data and we see what comes out actually. If that number is weak in this case, we would call that a bearish impact for the US dollar. So you'll see this score, when considering all these things, gave us a 53.85%. When we go over to our eco surprise meter, which then takes a look at all of them, you'll see that that score shows up right here. So you can better understand each of these in their isolation by going to the economic surprise meter if you want to look at all things at once. But then if you want to go look at how those things are scored, head over to their respective heat maps for more information. Now, in terms of what you mentioned about the Top Setups Eco page, Top Setups Eco page, all this does is it just says, looking at our list of metrics, which does not score the exact same way. There are some weighting factors here that are slightly different, like we weight things a little bit differently. These scorings are not quite the exact same as our eco Top Setups eco score. Like they're going to deviate just slightly, but generally speaking, they should give a comparable idea, right? So like NZD, so if we go back, NZD USD is getting a high score. Let's go take a look at our eco surprise meter for a second. And what we can see is here is New Zealand with a very high score, and here is US with a very, not a very low score, but a lower score. And part of the reason is that I just know off the top of my head that the economic score for New Zealand, part of the big weighting here is inflation, right? So inflation has been coming down, cooling more than expected for the US, and that's really weighed on the score for the US dollar more so specifically. I hope that answers your question. It's not a perfect one-to-one scoring in terms of how the Top Setups page, the Top Setups algo is not the exact same as how, just our simple economic heat map scores. Hopefully that makes sense. Let me just refresh really quick, see if we have any new questions. We do. Okay, next up. Sorry, let me fix this. Our next question is from Matt, trading for less than 1 year. Goal right now is to find a profitable trading strategy. And I wanted their question is, I wanted clarification on the COT data that came up in your live stream earlier this week. If I'm swing trading and most of my positions lasting a week or less, what's more important, the actual percentages of longs versus shorts or the weekly percentage change? Love this question. I talk about this frequently because it is a very important distinction to make. So you mentioned that you're a swing trader, right? So if you're a swing trader or a day trader or even a scalper, if you look at the commitment of traders data, I make this point very often. This table is really kind of take it with a grain of salt if you're short-term trading, because this is super long-term focused. Like these things move very gradually. Like I can tell you that gold's been bullish for like 2 years straight. So if you just knew that, there's been bearish trends within that. However, from a shorter term perspective, this table is where I focus a little bit more of the attention. What I mean by that is that if we get, in the latest week, a huge surge in NZD buying, right? We could see they added long contracts on the long side and they decreased short contracts. That's more of an impactful thing for short-term traders because that's where money has been recently moving in rapid succession. Hopefully that makes sense, but it is an important distinction to make. If you're looking at the commitment of traders data, I would encourage you to look closer if you are a longer term trader at this top section, kind of filters out some of the noise. But if you want that short term noise in the form of knowing what the recent market moves are, this might be useful. Like, for example, if you're like, oh, look, the Canadian dollar, they have a big short position. Well, they've had a short position for a long time. That doesn't mean that they can't sit through a short position even though it goes against them for 3 weeks. If you're a swing trader, that's kind of off limits for you. You're like, I don't want to be in a short position if it's going to trend up for 3 weeks in the meantime. Institutional money on a long-term basis might be perfectly fine with holding something for 3 weeks that goes against them. But if you're a short-term trader, you might not be, right? Got a couple more minutes. If you have a question, please feel free to fill out the form. I see some questions in the chat. Just do me a favor, throw your question in the form there so that we can make sure to get to you there. The chat is a lot harder for me to read questions than this form, because then with this form, I can just take it up one step at a time. Okay, next question is, I'm not going to say your name. I don't want to mispronounce it and disrespect you. From B, 1 to 3 trading, 1 to 3 years trading. Goal right now is to learn more about fundamental analysis. How do you think the trade deals will affect the US dollar? It's a heavy loaded question and not an easy one to answer. In recent times, it would suggest that trade disruption has been very weak for the dollar. People have been uncertain and losing faith in that centralism to the US. However, as trade deals have resurfaced, like the one with the UK and the expected ones with India and other countries, the US dollar has bounced back in recent times. Further progression to the positive on trade deals is bullish for the dollar. And I will say this here and now, we've recently had a slew of economic data that has supported US dollar strength. We also have evidence of trade deals that seem to be coming together. So when it comes to the US dollar, I am not nearly as bearish as I was, for the last few months. I'm feeling very neutral on the dollar at this time. I'm not feeling incredibly bullish, but I'm also not feeling incredibly bearish. I do think that trade deals are likely coming and that could reinstate the strength of the dollar. So I'm watching that close. Next question is from Sridham. They've been trading for 1 to 3 years. Primary goal right now is to become a funded trader. Looking for Kiwi yen longs and Bitcoin for longs. What are your thoughts about it? So I'm in an NZD JPY long position currently. I don't know how that's doing. I haven't even checked. Looks like Kiwi crosses or yen crosses are down. So I'm back to break even on this trade. I was in the green. Now I'm just back to flat. I have a long position at these current levels with willingness to add to the trade if it comes down to here. So I do like the long side of Kiwi yen. This has been a positive setup on the EdgeFinder, I do believe. Let's see. Well, it was. Did it fall off? No, it's still there. Very bullish, +9 score. So I still like it to the long side until further notice. And if it changes, I'll just close out of the trade. Bitcoin, same thing. I like Bitcoin longs, but not at these levels. Would have to wait for a pretty good pullback at this point. So feeling some FOMO on Bitcoin, to say the least. What is your watch list right now? My watch list at any moment is the top setups page on the EdgeFinder. It is an automated process for me. I don't spend time building a watch list every day. My watch list is pre-populated for me every single day. And if it sounds like a sales pitch, that's because it is. It's a great product and you should buy it. If you're an EdgeFinder user, you know very well how convenient it is to have tools that are sourcing data for you. And you, as the trader, just take your list and look through it and see if there's anything that marries up with your strategy. Whether you like to use, I know Alan, for example, a regular stream contributor and live stream, friend of the live stream, he focuses more on the top setups, economic algorithms. So we've built a couple algorithms that are more suited for different styles of trading. Right? Some people prefer to only look at sentiment. Some people prefer to only look at economic data. In my case, I like to look at all of it. But there's people who use the EdgeFinder in different ways all over the world with many different trading strategies. So we've built it to, it's been designed in a way that it will help many traders of different styles source economic data, whether you're a day trader, swing trader, long-term investor, position trader, whether you trade Forex, whether you trade indices, whether you trade commodities. Our goal has been to make a tool that is universally useful to help traders source economic data and sentiment data better than anywhere else on the internet. And we've been pretty good at it so far. And we continue to be better and better, thanks to the wonderful people that are on my team that make this tool what it is. And genuinely, you guys, the community. We take feedback surveys all the time. We listen to what people say they want to see next in the tool. And that is what has guided us in the direction of building the tool into what it is today. With that said, this is a great moment for a sales pitch for everybody who's watching here right now. In fact, the producer dropped a link so kindly for you guys, but genuinely, I'm joking, but in all seriousness, today is the last day. We are closing down the sale at the end of the day to get access to the EdgeFinder for our biggest discount of the year. We only do this low of a cost during our big sale event. And what we can see here, like I said, is 45% off is the lowest price that we're going to do all year long this year. So 45% off, last day to take advantage. And just so you know, it is a one-time payment. This is by design. I personally don't really love paying subscriptions for all eternity, and subscription stuff, you know, while some people prefer it, I know a lot of people prefer to just pay for something one time and not have to deal with those recurring costs. So we've designed the EdgeFinder to be a one-time cost for people who are really serious about their trading. This makes it an incredibly good offer. So if you're somebody who's serious about your fundamental analysis and your sentiment analysis and your technical analysis, you want to bring it all together, consider exploring our tool and taking advantage of our biggest sale discount of the entire year before it ends. If you want some more information, click the link that's just been dropped in the chat or head over to our website, a1trading.com. And if you have no interest in talking to anybody and you're just a total meanie, just kidding, of course, you know, some people don't want to talk to people. That's fine. Just head over to our website, a1trading.com, and you can explore plenty of resources. You can set up a training call if you're interested in that. You can go through our tutorials section. You can read all about the different features that come with the tool. We've done a pretty inclusive library of all the different functions and how they work within the tool on our website. So if I go to tutorials, for example, you can go right here and we have tutorials on all of this stuff, our economic heat maps, how they function, what we look for, seasonality, how we find trades, right? We even did this recently, how to trade with the EdgeFinder. So I'm just going to drop this link right now for anybody who would like to explore this page. Take it seriously today. If you are like, I think I might want to get access to this, I'm giving you fair warning. Today is the last chance to get the biggest discount all year long. So there you go. There's your pushy sales pitch from that mean, greedy YouTuber. But genuinely, I use it every single day. It has come a long ways, and it is a 3-year celebration since we launched the tool. And I hope that everybody who is using it will please take some time. If you're a real fan of the EdgeFinder and you love it, let me ask one last favor of you. Leave us feedback. Click this button. Please feel free anytime you're like, hey, I would love to see this added, or hey, if you could improve this. We love that stuff. Every time you fill out one of those forms, it goes to our support team, and we have an ideas board, and we are nonstop pumping time, energy, and money into building and maintaining this thing into the best thing it can be. Okay, I'm sorry for the long sales pitch. It is the last day, so bear with me. I think we had Kenzo was coming today. But I haven't seen him showed up just yet. So we'll keep running. Hopefully we get to see him. You guys know I love his commentary. He's awesome. All right, so S&P 500, NASDAQ still positive here today. Dow Jones is pretty flat. Yesterday, Dow had a really good up day, and then actually, did it hit its 200-day moving average? No, it didn't. So Dow is still a good way from its 200. The Russell's got to be a mile away. Yep, Russell's got plenty. Like if you're really, just for context, by the way, if you're like really bullish on the U.S. economy, like if you think it's really gonna go swell from here, the one I would say to look at would be the Russell. So the Russell is smaller companies in the United States that are publicly traded. And these companies are very subject to interest rates and the economy. They're very sensitive. They can do exceptionally well. In fact, I want to show you guys a chart because before I look at this chart, the perception of small cap companies has been really negative, and for good reason. Like if you look at let's say that you, right before the stock market crash in 2020, if you had held from 2020, that's over 5 years ago, right? You are up 20% in 5 years. I don't know about you, but that's not a very good return compared to, especially look at the NASDAQ, right? Right at the top before the COVID crash. If you had held through everything, 110%. That is a massive difference in the return that you would have gotten holding the NASDAQ versus holding small cap companies. So the natural conclusion to that would be tech stocks seem to just monstrous, they must have monstrous outperformance compared to small companies, right? And I've been watching this trade for a long time. The small cap stocks have gotten so destroyed in terms of outperformance by the NASDAQ and the S&P 500 that it would seem foolish to think that small caps, companies that are so sensitive to interest rates and the economy and with all this uncertainty, why would small caps be the place to be? Well, I just want to show you an interesting chart that we can do in TradingView. Anybody can do this on their own. Type this into your TradingView chart. IWM is a small cap ETF, an exchange traded fund on the stock market that tracks the Russell. The SPY is the S&P 500's equivalent ETF. If I hit enter, what does this chart show you? This is a weekly chart. It seems pretty silly to be long this chart. Being long this chart means what? Long this chart means that you're betting small caps will outperform big caps, S&P, right? And looking at this chart, you say, that's just silly. It seems dumb to be long small caps. Small caps get crushed by the big ones. And it actually makes a lot of intuitive sense if you think about it from this perspective. Big companies have more cash. They can reinvest. They can buy smaller companies. They can eat them up and add their bottom lines to their bottom lines, right? So why on earth would you ever want to own small caps? You guys know where I'm going with this. I'm always I always like decorate it and then just knock it down, straw man my own arguments. This is why markets are really difficult, like really, really difficult, because that's not I would say the same thing. Like naturally in my head right now, I'm saying this. I'm like, actually, you know what? Like tech stocks and big cap stocks makes more sense than investing in small ones that can't weather the storm as well. They need to borrow money in this high interest rate environment, or higher than we're used to interest rate environment. We're not in higher interest rates, by the way. High interest rates are 10+% historically in the United States. 5% and less is not high interest rates. But let me show you something else. Take a look at the small cap index. Let me now give you the opposite story. Here is IWM versus the S&P 500, where small companies dominated big companies. Ready? In this environment, why would you want to buy the big companies? Big companies are slower. They've already reached maturity. They can't grow as fast as small ones. Think about a small company that's hit it big and come to market, and they have unlimited potential to grow into their shoes, right? They've got big shoes to fill, but big companies have already filled those shoes, right? So do you see what I just did there? What I just expressed to you, and it's a very important lesson, is recency bias is very, very strong in financial markets. Okay. So what is happening in the current era is very easy to believe is going to continue into the future. But there's an old expression we've all heard 10,000 times. Past performance is not indicative of future results, right? We've all heard that at least 4 million times. Every single one of us. I'm just kidding. But you get my point, right? So when I showed you that, do you guys see where I'm going with that? Like, you can hear a good argument for the environment. Like, you can hear a hindsight-based argument. I don't know if I'm resonating with anybody on this. Can you do me a favor? If what I just explained about this concept of recency bias, if that made sense to you and made you think, can you just type yes in the chat and thumbs up the stream? Let me know if that depiction of recency bias made you think. Just type yes or type 1 in the chat. I'm just curious because I thought that concept was really interesting. I think this is a really good example of recency bias. Small caps, of course, they get beat. Big companies can just buy them up and outpace them on every step. But then you go back here and you say, of course, small caps are better. Small caps are better because they have more room to grow. Big companies are already mature. Do you see how both of those examples seem obvious when the market has behaved a certain way? Right now, you know what the obvious thing is? Gold. Gold goes up all the time. Of course, gold goes up all the time. Trump's in office. He's a big uncertainty of the world. Or they keep printing dollars. Of course, gold keeps going up. Look, I'm one of the biggest bulls in the room when it comes to gold. But I also understand that there are also times, ready for this? Between 2011 and 2016, gold grinded down for 5 years. So I hope that what you take away from the stream is that if you're a regular, if you're trying to learn new things from the stream all the time, I hope that I can continuously do that and share what I've learned over the years in the markets with you. One of the key things that I want to express to you is that markets are super recency biased influenced. When gold is going straight up, people believe gold is going to keep going straight up. When gold is crashing, people believe gold is going to keep crashing. When tech stocks are unbeatable, people believe the only place to invest in is tech stocks. When tech stocks are destroyed, and boy, can they get destroyed. Take a look at the NASDAQ in 2000. I mean, this is game over. If you're somebody who was like super leveraged long stocks, long tech stocks, like what I encourage everyone in this room to do or in this stream, be a historian. Do it for yourself. I have always loved history, and it has served me really well to humble myself in markets to the degree of just simply not claiming I know what's going to happen to the far right, the hard right edge of the chart. We don't know. Now, not knowing does not mean you can't make money. You can make money without knowing for certain, right? The difference is we don't want to pretend we do know. There's so many people who believe they know that Palantir is going to take over the world, or people who believe Tesla, and I like Tesla. I'm a Tesla shareholder. In fact, it's up 6%. Let's go. Like, I'm a Tesla shareholder. I think it has potential in the future. Foolish of me to say I know that it's going to dominate the whole world for countless years. I don't know anything. And once you accept that you don't know something in markets, things get better. It's a weird concept, but it is very true. Once you accept that you don't know for certain what's coming next, but rather you are being reactive, you're managing your trade size, you're controlling what you can control, your trading will improve. Where people lose a lot of money is they think they know something for sure. There's going to be, I'm telling you right now, there's thousands, if not tens of thousands of traders who say, I know the S&P 500, the NASDAQ are going to sell off right here. And people who believe that way, maybe they're right this time and they leverage up big time and they make a lot of money. And then next time they do it again and they're wrong and they get humbled. So I'm just trying to share with you or express with you just some of the lessons learned in markets. It's just some important stuff. The tech bubble, original internet pump and dump. Yes. Back then it was I wasn't trading during that time. Obviously I was playing PlayStation 2, but during or was that PlayStation? Was that pre 2001? When did the PlayStation 2 come out? I feel like it must have been like 2003 or something like that. Anybody know? When did PlayStation? My brother sent me a picture of a saved game that I had on Star Wars Battlefront 2 from 2007. And I was like, whoa, that's crazy. How old are you, Nick? I am 28 years old. 2005-ish. Okay. That's what I thought. Like, I feel like it was, I remember when it was really cool to get one. Right at 2000? Okay. So maybe it's older than we think. Oh, PS2 came out at 2000. Okay. Well, I remember when it was, I guess I definitely don't remember when it was selling. I must be thinking of like Xbox, like an early Xbox or something. Because in 2000, I was like 5. So I don't remember that. But I do remember having a PS5 in like 2004, 2005 and thinking it was really cool. Ah, yes. My good friend had one of those. The PS2 Slim. That one was cool. One of my favorite PlayStation games was Star Wars Battlefront 2. The other one that I really liked was Ratchet and Clank. Anybody play Ratchet and Clank? That game. Whoo, man. Some nostalgia. Ratchet and Clank, one of my favorite games on there. I'm trying to think of what else I played. I definitely had some like Need for Speed games, I think that's what it was called. That was really fun. I loved those games. Yields lower here this morning. Let me see if I have any more questions from you guys. If you did drop a question, I'm going to try and make sure I don't miss that. No Kenzo today, I guess. Okay. Yep. Got some more questions here. How can I trade currency pairs in Europe without paying swaps or using CFDs? ETFs like FXY are illegal in Europe. Is that right? You guys can't trade FXY? Man, ETFs are the bomb. Like, as much as it is frustrating as a US trader to not be able to trade things like XAU USD, I can't trade that, by the way. Like, I can't trade CFDs. That's annoying. But I actually am very happy that in the US we can trade ETFs. I can trade ETFs for pretty much anything. I can trade the Indian stock market through, and there are gaps to these, so that's a downside to ETFs. But from a swing trading perspective, ETFs are like the ultimate. EWZ, I can trade Brazil. I can trade a general emerging markets fund. So this has like China and many other ones in it. India, FXI. I can look at Japan. I can even trade specific industries and sectors. Like here is a medical device ETF or a cybersecurity ETF. ETFs are awesome. Are they not available to European traders? Can anybody confirm or deny that? Can you trade ETFs? Like, I'd be shocked if you can't trade ETFs maybe in specific countries, but like you guys can trade VOO, right? Like the S&P 500 and GLD. Again, many European traders. What's interesting is like CFDs. Why are they illegal in the United States? It's because they're like leveraged products, and Now, again, I'm pro CFDs. Like US traders should be able to trade whatever they want. I'm kind of in that camp. But for whatever reason, the government has decided that leverage is not, you're not allowed to offer that to US traders. So in the US, I trade GLD personally. I'm a swing trader, so I don't really need like, 24/7 trading, but I can trade GLD all day long. So I do that quite frequently. For trading things like gold, I can trade SPY for stocks, GG or QQQ for the NASDAQ. So I trade ETFs quite a bit. That's actually the primary thing that I trade is ETFs. For any suggestions for swaps for European traders? To answer your question, ETFs okay, James says he can trade ETFs in the UK. If you can trade ETFs in the UK, here's something to think about. Let's say you're bullish on the yen. And this is something Chris Pulver does. And I do it too. If I want to be long the yen, I do not short dollar yen. Especially if I have any intentions to hold this long term. If I want to be long the Japanese yen and short the US dollar, I don't hold short positions on dollar yen. Instead, if I'm bullish on the yen, I'll usually trade FXY. Reason for it, it's relatively liquid. It's liquid enough for me to trade. And the holding cost, let me go here. Analysis, there it is. The expense ratio for holding it for a whole year is 0.4%. Now, do interest rates get considered in the price? I need to look that up because I actually don't know. And that's a fair response to me right now. I haven't really thought about that. Like, does the swap or interest differential get factored into the ETF? If anybody has like ChatGPT open or Grok or Gemini or whatever, ask AI, does FXY price get degraded due to interest rate differentials? CFDs are illegal because they're scammy. There's some sketchy activity, especially on very sketchy brokerages, right? CFDs are just leveraged products of the real thing. To be honest, they're almost like calls and puts of particular things. I don't necessarily think that CFD brokerages are all scams. I just know that for the US specifically, there's just limitations on the available leverage you can offer to US traders. That's why the same reason why prop firm stuff kind of blew up for some firms is they were offering leveraged products to US traders, which is a big no-no. ETFs are legal in EU, I think you meant, but only the regulated ones with the UTCIS regulation. Okay, so I'm just going to assume that's probably like the really big ones. Like I'm going to assume that like smaller ones, like maybe sector ETFs, I don't know. Like the ones that meet that criteria. I get what you're saying. Thanks for that. DK, thank you. Somebody plug this in. FX, foreign exchange prices can be affected or degraded, but specifically, thanks, Tiger. I think this is what we're looking for. We want specifically FXY. So yes, the FXY Japanese yen trust can experience price degradation over time due to interest rate differentials between Japan and the US. So there's your answer. So still though, I personally trade FXY when I want to be long-term bullish the yen. The primary reason, if I'm being completely real, is just because it's convenient within my portfolio. Like I have most of my capital in my primary portfolio. So if I want to put on a serious size position, I'll just trade FXY, because in my brokerage account, I can't trade Forex in the same account that I can trade stocks and ETFs, which is where I do most of my trading. So yeah, but I'm glad. Thank you, Tiger. That was a good response from AI that helped us, because again, it just shows you, like, essentially you're not going to fully escape the cost to holding Japanese yen long through ETFs. But for me, I like having it all in one brokerage. It's kind of a OCD thing. Nomi said the same. Said it can. Blint says, I can access interactive brokers and Pepperstone from Turkey, especially interactive brokers, completely CFD, even options buying and selling can be done. Yeah, interactive broker seems like the most international friendly brokerage that I've come across. Let me answer some more questions here. It looks like we got some fresh ones. Loris, been trading for less than 1 year. Goal is to become, oh, this was the question we just did about FXY. Great question, by the way. Thank you for bringing that to our attention. Terms of alternatives, I really think that you're not going to, clearly by our conversation there, you're not going to fully avoid the costs of holding Japanese yen long simply because of the interest rate differential. Even if you tried to do it through options, the price of the underlying that you have an options contract open or long or short on is still going to be impacted by the interest rate differential, it seems like. Next question. And Kunda says they've been trading for 3+ years. Their primary goal right now, what do you understand? Looking to better understand the EdgeFinder. Hi, Nick. I'm trying to buy the EdgeFinder, but I'm waiting for my UK bank account to transfer to USD. What time does the discount code end? I'm hoping my transfer is quick and I don't want to miss the deal. Yeah. And Kunda, so do us a favor really quick. If you're still watching the stream, head over to a1trading.com. This will be the easiest way for you to just connect with someone. They'll email back and forth with you. So just go to our website, a1trading.com, or click the link. We'll drop the link in the chat. And just click this link right here. Just send us a message letting us know that situation, and we'll make sure to hold that deal for you. So I don't want you to miss it either. Again, the price goes up by the end of the day, but just to make sure, we will specifically, if you need like an extension by a day or two, that's fine. Just let us know. Just communicate with our support team, and Emily, who is in our office right now, she can help you out with that. Credit to you, Nick, doing a 2-hour stream. Take some skill. I started, well, today's at 1 hour. Wait, when did I start? Oh my gosh. I've been going 1 hour, 10 minutes. These questions though, James, they really help. James, if you like doing the questions, maybe I can get you plugged in on this. Like, maybe James, during your segments, if you want to do questions, I enjoy doing them. They really make the stream more fun. Like if I run out of setups to talk about, I know you do this too, James. Like as the content creator, right? I go through my setups for the day, and if I run out of stuff to discuss, you kind of run out of steam. But questions are nice because it brings up a new conversation to discuss. So I think I might actually set this up so that James, you and Alan, anybody who would like to do some live stream questions can do so. I think that would actually be fun. Like even if I'm not on the call. Who's up next? We got Chris coming up next, I think. Did oil just... Oh, don't do it to me. Uh-oh. I might need to get long oil here today, guys. Okay, I think we're done with the questions. I just noticed that, so we have, let's see, oil prices broke through our level. EdgeFinder's got us at a +7. I'm going to watch oil today. If I take a long trade, I will share this inside of the group. 4-hour chart looks really good to me. I've been talking about this for the last couple of days. Yesterday, we were talking about how I'm bullish on oil, waiting for the EdgeFinder to give us that confirmation. Looks like we might be getting that today. Gold's melting down. Yeah. Okay. So this is, that's good to know. I'm glad I just checked that because now I am going to watch oil prices here today. That is pretty much top of mind for me. I mean, I'm very bullish on the indices, but they just haven't been giving me the pullback I'm looking for. Meanwhile, oil is actually trying to break out here a little bit. Trend. So this trend filter, you can see we have now kind of been trying to break through here. I'm really going to watch this close. Like my thought process is I think we actually could fill that gap today and keep going higher. Really good week, by the way, for oil. You had the gap down, prices filled. So I'm probably going to get long oil here. Let me look at the 4-hour chart again. If we get a little bit squeezed lower, I will probably take that trade. And if I do take that trade, I will share that inside of our Discord. If you're not in the Discord, just a quick heads up, the Discord is also 45% off for a limited time. We'll drop the link here in the chat one last time. If you don't have a membership with us, you can also see every trade that I'm taking inside of our Discord VIP group. And we just launched a new feature for members. If you're a gold member and you don't have this, heads up. The new trade tracker is coming along pretty nicely. You can currently see trades that I'm currently in. So you can see my stock positions. By the way, has anybody seen Robinhood recently? The stock is a monster. Delta Airlines, 32% up. Google kind of broke my heart, fell recently. Tesla, what the heck is wrong with you, Tesla? Like some of these stocks are going ape, you know what? They're going crazy. Then you have like, you know what's interesting is like the ones that are underperforming, or not underperforming, but not doing, like Amazon, Nvidia, like these ones are kind of mixed. Then you have these companies like your Ubers and Robinhoods, Teslas, Delta Airlines. These ones are beast mode in it. Anyways, if I skip on the stocks for a second, just narrow this in. You can do this on your own end if you're a member with us. You can just select for Forex. You can see I only have one position that's positive as of the last update. I'm long Euro, CAD Swiss. I have 2 trades open. This one's still in drawdown, so not shying away from that one. I'm still dealing with the drawdown on that. I think that positive trade deals and also, by the way, oil bullishness could act to help CAD Swiss. So I'm going to hold on to those trades and just kind of sit through that. They're very small positions. And then Kiwi Yen, Euro Dollar. So I'm watching oil today. If I take a new trade, it will show up in the new trade tracker. You can also see Frank's trades here. And we have a full list of educational content coming soon to our new portal. So this is a portal that will be available to members. And it's very much early stages, but we're working on it this summer. We have an intern coming that's going to be helping to work on this. Actually, 2 interns this summer to work on some of this stuff. So it should be fun. But we're making some big updates for existing members that I'm really looking forward to. Institutions have been long oil for 2 weeks straight. Yeah, and I'm really curious too to see where that goes today. Because today you do get the COT data, which makes me a little cautious because that could flip. Like you could get some selling that took place this week. But I'd actually be surprised considering if we consider up to Tuesday. Okay, yeah, I'd be pretty shocked if the commitment of traders data actually showed us institutions were selling this. Like if they were selling in there, I'd be pretty surprised. Well, I don't know. You had this sell-off that was included in that as well. I'm going to guess COT data this week, institutions were flat. That's my guess because you have this kind of range bound. But we'll see. A nice push through these highs. Oil's back to flat on the day. But I do really like the setup here for oil. So we'll watch that close. I've got a Does anybody know Wayne McDonald? Anybody familiar with Wayne McDonald? I'm actually going to have lunch with him today. So I'm going to hop off here in just a second. We've got Chris Pulver joining the call to take over. I'm going to go prep for some stuff here today, and then I'm headed off to lunch with Wayne McDonald. If you know him, he's a regular live stream. He does come on our show. He should. It would be awesome. But he's been live streaming for as long as I can remember, longer than I have. He's a Forex guy. Takes a look at a little bit of everything, actually, indices, kind of like I do. But we're having lunch today. So if you know him, tell him I'm looking forward to seeing him at lunch, which will be fun. Anyways, guys, up next, we got Chris Pulver taking over, the man himself, going to be taking a look at this. And I also just got word, I think, Chris, we're doing a trading battle together coming up in a couple weeks, bringing that back. So I'm excited. I'm helping him a little behind the scenes with trading battle this time around, which I'm really excited for. Anyways, up next, guys, Chris Pulver. I got to run. I'm about to pee my pants, so you don't want to see that. So we'll leave you with Chris Pulver. Stay tuned.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Good morning, everybody. Happy Friday. Welcome back. Bitcoin had a great run yesterday. We are nearing all-time highs. I still think bulls are going to have to temper expectations. We'll probably end up topping out around the 108, 109 level. If this is going to be accumulation, just don't be terribly shocked to see resistance. Change the color here. To see some resistance happening. We have some inefficiencies these last couple of rips. So pullbacks are probably going to happen. But it's nice to see some momentum. And this is helping. Coinbase is up quite a bit. Ethereum is possibly getting a break on the right-hand side of the trend line. IBIT has made a nice run. I've got covered calls at 62. I'm not trying to get them called away. And then MicroStrategy is up over $400. Gold and silver. Gold's still kind of range bound, which is totally fine. We get more accumulation. We'll start identifying some lows to scoop up some more exposure. At least I will. Ideally, I'm looking for something around 3,000. We probably have to see a dollar move in order to see gold have a big play. Silver to me still looks good. I tried to find this chart this morning. If I go XAG, XAU, it doesn't pop up, but if I go XAU, XAG, so the gold versus silver, what I thought was interesting on this chart is just take this as the inverse. Okay, if I did an inverse here, and this might be wishful thinking, but would it ever be possible that silver ends up getting strong enough to move down here or move down here? Maybe. Right now, I mean, gold has outperformed to, I'm trying to think where this really peaked. This peaked around COVID time. But after that, I mean, silver got a lot stronger post-COVID versus gold, at least performance-wise. So, I'm wondering if we end up having another, maybe a peak where gold gets to the point where it just outperforms to the level that silver is going to catch back up. And I wonder what that performance looks like. I still think they're both good. I'm just looking to see on the chart for silver, going back to these, highs in 2011 and these highs in 1980. I'm hoping that silver will continue to make a run, looking for some resistance to break. Once this resistance breaks, this is something I want to continue to run with to the upside until silver's trading, hopefully in the 40s. So I think that could be pretty good. So I like silver and I like gold. Currency strength chart for today. Japanese yen a little bit stronger, a little bit quiet on the volatility side. We have New Zealand weaker, CAD weaker, dollar weaker. Let's go dollar index here on the chart DXY. So dollar yesterday had a decent pullback. Oops, I need to go dollar index. If you're zoomed in, let's say 4-hour or 1-hour chart, if you are just so anxious to sell the dollar, that's probably a good spot to be watching. We're hitting resistance on the 4-hour chart right now, right around that 200 moving average. Also, previous levels of support to become resistance. So I could see this area as a tempting sell, but we can still pull back to this trend line. So kind of area 1, maybe letting it gravitate back here towards area 2. That'd be a sell around current price. I mean, just off this 101 level, and then right around this 102 to 102.50 zone. So I don't think the top is necessarily in on the dollar. The daily chart is still back and forth, but I don't want to see the suckers play, which is, we break this trend line and people are trying to sell that. It's like, yeah, we might go a little bit lower, but I could see this area still putting in, some trappy choppiness. And then eventually this does become like a bigger sell trade. So I think a pullback, I mean, just take this full swing. We haven't had much of anything as far as a pullback. So pulling back into this area, pulling back to where this, aggressive candle was, backside of the trend line, there's a lot of resistance up here. So I'm still patient on the dollar related pairs. If anyone's getting antsy, like I said, Aussie dollar, if you're trying to buy it, it's just not a shallow pullback to me. That's way, way, way too shallow to buy. Euro dollar. This one, if you had a chance to short kind of this choppy area, a break, retest, and go. I mean, that was okay. Let me see what this level is here. It's about a 113.70 down to 112. I mean, it's 170 pips. It's not bad. Again, still though, it's such a shallow pullback that maybe another pullback, another push lower, and something like this. But if you are short euro dollar, taking some profit in the 30 to 38 to 50% zone, probably be more safe than sorry. Pound dollar still choppy at these highs. UK and US are looking like we're inking a trade deal. Is that one of many to come? It's possible. What's the stock market going to do? I spent a lot of time yesterday talking about, S&P. I still expect there to be. I hope there's a dip to buy. I mean, that's kind of what I'm wanting to see. Just it would make sense to feel like buyers have a chance to participate in this, this V bottom. And to get that, I mean, I'm not sure what the catalyst is going to be to drive prices back down, but I would hope that somewhere in here, we talked about this a little bit yesterday, but somewhere in here on the S&P, that this would be an area to be looking to buy. So somewhere between 550 and 530 on the SPY, 5,500, 5,300 the S&P. If this is going to be, this isn't necessarily the top, but if this is a head and shoulders pattern, left shoulder, head to neckline, right shoulder. Now, you're going to have to be courageous enough if you want to trade the right shoulder. You're going to have to be courageous enough to see, is this a bottom that I can trade? If you start taking some bites right here, I would keep it defined risk just in case the market decides to go a little bit lower. This would probably be the more disruptive move is if we come back and revisit April lows. I think Trump and co probably don't want to see that. So anyway, but a lot of them are close, right? We have this high for the pullback in March. We've been squeaking out towards that 570 level on the S&P. Here are the Qs, kind of the same look, right back up towards these March pullback levels. If we have a left shoulder, head to neckline, looking for a pullback on Qs, maybe 470 down to potentially, 450 or so. This one's a little bit wider, a bit more volatile. But yeah, I could see, 470 to 450 offering up some dip opportunities to get long. And eventually, if and when we break this neckline, and maybe this takes the summer. We had a wild and crazy, 3 to 4 months trading since, Liberation Day, post-Liberation Day, April 9th, the market's been recovering. And if the market is forward thinking, if we can get past the worst of this trade nonsense, or there's more clarity on this trade war and these global tariffs and how the U.S. is going to be positioning itself with the world, then the market, may be able to price this in. But it might come at a bit of a pullback first, which, like I said, I'd be totally happy with. Okay, I'm watching the S&P slump into some fresh lows in the morning. So we are seeing red in the S&P, red in the NASDAQ. The Dow is red. Russell is red. That's fine. I mean, I'm fully expecting a pullback in this market. I'm no longer, I did a synthetic short last week on Friday into this week's early trading. I'm now just kind of hanging out, sitting on the sidelines. Let me go, let's go SPY. I'm just going to check some of my levels here. Maybe a 560 level lights up. Go down another $3-4, but I'm not seeing a huge level yet. That run up to 570 yesterday worked out pretty nicely. So I had a butterfly spread yesterday, and that paid out pretty well. That was a 22-cent debit. I ended up closing it for 50 cents. So pulled over 100% on that trade, which I was pretty happy with. My Russell campaign for IWM is going well. I sold the call at 200. It's out to next week. If we're at or below 200, I keep all that premium and I'll sell it again. I'm looking at rolls right now on Tesla, which is trading up to 301. I'm going to let this run a little bit further over the weekend and then see where this starts to trade at next week. I'll probably just keep rolling. Maybe it's a couple of dollars a week, but as long as price is still running higher, I'm going to roll my calls. MicroStrategy, I still have some shares. Not ready to roll this one yet. I do think that Bitcoin is going to face some volatility, so just be on the lookout for a pullback on Bitcoin. If you obviously see a run like this, it's very possible that the market's going to pull back. Example being, we had that post-election break. There is an inefficiency. What did price do? It rallied, and then it spent the rest of the time coming back to find what? That inefficiency. So I just see that price action playing out where this probably gets checked and this area probably gets checked. So if you're interested in buying dips on Bitcoin, that's not a bad spot. This to me is a better spot. This is a better spot to be looking long again, between about 90 and 87,000. Another spot to be looking long and see if we can get back up to these highs. Okay. If it does get up to the all-time highs, that's fine. Just expect a pullback. Hit some highs. Everyone can celebrate. Oh, Bitcoin all-time highs, and then we'll pull back. Most likely we'll pull back. What else? Let's check some non-US. Japanese yen. FXY is the Japanese yen. EWJ sitting near these highs. DAX up to some fresh all-time highs on the German ETF or the German index. Fez up to all-time highs. FTSE didn't really move, even though they, this US-UK trade deal. Argentina creeping up there. China still green. Brazil looking pretty good. Now we're back up some fresh highs off these recent pops above the 200 moving average. Latin America, same thing. Nice little surge. So we are about 6% above the 200 moving average. I would say that old Latin America is getting into a buy zone with some room to run. You look left on this chart, $25. Look left, $28. Look left, $30. Look left, $32. Let's cheer on some Latin America. Mags. A lot of resistance here around this cluster moving average. So we're at the 200 moving average, a little bit of indecision happening right now, which is fine. This is kind of the same thing. Could this be setting up for a bullish head and shoulders? Sure. Could this run, a little bit hotter into this resistance area? Yes. Either way, if it was offering a pullback in here, I probably get some exposure to mags. If it pulls back to lows, I'm going to be getting some exposure to mags. So I will start adding this one back into the portfolio. I was long mags with everything else. I was picking ratio spreads on individual stocks. I was long mags around $41 when we had that basically a huge run up to $45, $46. I took profit. So it was kind of like a 1 to 3 day hold. But then high or low, and we did push into the 200 moving average. I didn't participate in that second bit. Apple just hanging out around $200. Amazon, I've got an earnings play that expires today. Unfortunately, it's not looking good. It's right in the middle. I need to see if price could get to the expected move, and it didn't. Earnings was right in here. I was really it was good earnings. It just didn't do anything price wise. I didn't see any major volatility in Amazon. Broadcom making a nice run above the 200 again. I participated in a ratio spread. That was about it. That was my trade on Broadcom, so no exposure after that. Google Had some bad news this week on basically Apple going into an AI search versus a Google search. I still think Google I would hope for everything else that it does is still okay. So, I mean, I'll keep an eye on it, obviously, but I don't want to see Google go too much below the April lows. I like to see it hold about that 150 handle. Meta, 595. This one would be a great range trade. Meta would be a great range trade if we come back to like $500. Maybe a bite there. If it goes any lower, I really like Meta in the 450 or lower. So I'm considering even, certainly dollar cost averaging if I want to put a couple $1,000s into it. That's a nice discount, but also some income trades and ratio spreads and 1-1-1s and things like that with options. So could be wishful thinking, but if we pull back, back below the 200 moving average, is there any momentum to get back down to these lows? If so, cool. I'll probably take a bite with maybe a $1,000 or $2,000 allocation into anything in this yellow zone, $1,000 or $2,000 allocation, and then my target would be, Meta get back to all-time highs over the next couple of years. Microsoft has just been ripping through earnings, and all the ratio spreads worked out nicely. All the 1-1-1s worked out nicely. Allocations are in profit. Netflix starting to top out a little bit. Nvidia also had a nice run. Trump had a late day announcement, I think on Tuesday. Maybe it was Tuesday. Had to have been Tuesday. It wasn't FOMC day. Had to have been Tuesday. Anyway, it was something about, they're curbing AI chips, and they're kind of repealing something that the Biden administration had put in place. And this was the surge on, actually, I guess it was Wednesday before the close. That's weird. Anyway, that is NVIDIA. Let me make this, move this back down to 130. 130. Okay, Tesla have back above $300. This might get traders excited, breaking this resistance zone on Tesla. I'm sure, Elon Musk is a little bit happier, but Tesla's fairly volatile. It's a highly traded stock now. I mean, I saw more options traded on Tesla than on the SPY, which is ridiculous, but good for Tesla. So if we got a lot of traders getting long, that's cool. I wouldn't mind seeing a pullback. If we have a break above this level and a pullback, I still want to be selling premium on the ownership that I have. My trade that I closed out this week, it was a 1-1-1. I closed out, I think it was 284, closed it out for like 13 or 14 cents. So took most of the profit there. So 284 minus 14. So took about 95% of that max credit. That trade closed out for profit. Now I just have the 257.50s and the 277.50s that I'm rolling week to week. Berkshire, don't want to call the top in this one, but if we end up coming back down to the 200 moving average or so, this is probably a good spot to maybe add some exposure. It's still an expensive stock. I don't plan on doing much with it outside of maybe dollar cost averaging. Okay, SPY at 563.40. Looking like we're breaking some fresh lows intraday. 560 starting to light up a little bit. Got any directional trades? 560 might offer up a winner. That would be from, it's still like a $7 move on the day. There's also a gap fill around 561. That would be from the 7th of May. If we officially fill that gap, that'd be around 561.31. So I'm watching this gap right here. 561.40, 561.31, right in there. Let's go back to bonds. Well, shaken not stirred. Bonds. I think this is a bit of a buyers / scalpers arena. If you're scalping bonds, the issue is it's certainly not something I would want to hold. I did some work yesterday on TLT. Let me check and see my Pulver alerts if I have. So this week, Pulver alerts. Let me see if I've got a TLT trade running. I know I had a diagonal spread. I'll walk you through what I'm doing on this trade. So I'm trying to reduce my exposure to TLT. So here's what ended up happening. Here's just one example. I've got this on everyone's accounts, but here's just an example of how the breakdown is. So I had a July $96 sell call against my long 65. So the math works like this. I had a January 15, so this is a 115 of 2027 65 long call. Against that, I've sold several calls. So a March call I sold against it. Okay, so basically I got into the trade. I think my debit's around $20 right now. Let me go into my tracker here. All right, so let's go to TLT. All right, so yep. So I sold against this in March. So the way this first started was a 331.25 91 sell call, and that closed. And then I did a 430 expiration 92 sell call, and that closed. And then I did a 731 expiration 96 sell call. And what I did is I just rolled that down in price and reduced time. So now I have a 530 expiration 89 sell call. So my net debit is 20.82 is my net debit. So if I take the 65 long call plus the 2082, that's going to equal 85.82 would be my break even. Okay, 89 is my sell call. So if TLT is greater than 89, then I'm going to get this diagonal spread called away for profit. Okay, so that would be what, $3.18, $3.18 profit per contract if price is above $89. The reason I'm doing this is I don't think that the bond market is going to be this big rip to the upside, because that would mean that we'd have to have a risk-off environment. Right now, I don't think the Trump administration is going to want to see a further test of a risk-off environment. You know, they try to flex their muscles. They basically broke the bond market. They're backpedaling on the tariff, the tariff situation and the trade war. I mean, Trump is doing everything he can essentially to jawbone the economy. He's also trying to talk down the Fed and say, look, they're gonna cut rates. They should cut rates. They shouldn't cut rates because yields aren't going down, and the Fed cutting rates is not going to make yields go lower. It's not going to make yields go lower. So I don't know if Trump understands that, but he needs to stop talking about it like he is in control of making the Fed do something that he says. I think Powell, with Wednesday's press conference, he addressed a lot of uncertainty with trade policy. That things are looking better. There's resiliency in the U.S. economy, but I also think that the Fed could see some runaway inflation if we start to see the yields go higher. So I think their job right now is to sit and do nothing, and I think they're doing a great job doing that. If they do start cutting rates in July, I have my concerns with how effective it's going to be. I don't think yields come down. I really don't. Yields may not go up, but I don't think yields come down. So point is, I'm reducing my bond exposure because if we're not going to see really a real risk-off environment, then I don't see the bond market being something I want to own. There's plenty of other income to generate trading indexes or trading ETFs that are index correlated. Way more premiums on this versus the volatility we've seen in the bond market. So summary is this. I've 96 when TLT was ripping, I'm like, well, heck, if this thing's going back to $100, let's try to take advantage of that. But now that we've seen a huge collapse in the bond market, yield sticky, I am just hanging out like, yeah, I'm just trying to get it called away. So there's going to be some fluctuation in TLT. I'm using obviously expirations that are much closer to current levels. So I've got a chart alarm set at 89, chart alarm set just above 90, and I'll just keep rolling the calls. So the nice thing is only going out a couple weeks at a time. I'm just going to keep chipping away maybe 20, 30, 40 cents. I mean, contract wise, I have a decent amount of TLT exposure. I think for everyone's accounts, when it's all added up, and let me add this up. So I've got 2, 4, 6, 8, 12. 16, 18, 22, 26, 28. So I have 2,800 shares represented with my contracts in TLT. If I make $3.18, I mean, I still make $8,900 on TLT without having to really need price to go anywhere. Price just stays where it is. I can keep selling calls. I've got plenty of time to do it. I'm out to 2027 on this trade for the long side. But as far as generating income, I don't want to have the bond market be something that breaks or see the market if we're going into like a risk on environment. I don't think that's really going to favor the bond market going up. Risk on, more than likely, risk on in equities is going to mean possibly pressure in the bond market to push it lower. Okay. But I think that yields are something to watch right now, because if the TLT, for example, doesn't really go much lower than this area, then we probably jump around a little bit. Look at your US 10-year, kind of the same thing. US 10-year, it probably jumps around a little bit. We may not get above this high. We may not get above this or below this low. We might just be choppy here on the 10-year yield, which is okay. Like, the Fed doesn't do anything, so there's no reason for it necessarily to be drifting higher. But like I said, my concern is that what happened last year happens again, which is Fed starts to cut. They may not do the aggressive cuts like we saw back in September last year when they cut 50 basis points, and the market thought that was a surprise, even though it was on every economic calendar. But if the Fed starts cutting, let's say another 50 to 100 basis points in these next 12 months, does this go up another 50 to 100 basis points? That can't be a good thing, and maybe the equities market doesn't reflect that, but that's going to put a lot of pressure on the bond market. So time will tell. Okay, mortgages, average mortgage still around 6.76. I did a lock at 6.6. I'm actually kind of happy with that for right now. It's not great, but it's manageable. And if we do see anything that changes where rates do come down, if I get a 1% improvement, then I'll refi. That's probably about as good as it'll get. I think it's going to be really difficult to see, sub 3% mortgages maybe in the next 10 years without having some type of major crisis. It's possible. I mean, hell, we could have a major asset bubble all over again, and maybe it's a 2008 2.0. But until that happens, then I don't think the housing market's going to do much other than let supply side catch up and drive housing prices lower. Okay, let's talk currencies. I've got some China plays in here. Alibaba still sideways. I should have some covered calls expiring on Alibaba and Baidu coming up pretty soon. Let me check these really quickly. So Baba, I've got some shares of Alibaba. Baidu, I've got a decent amount of exposure. I have some shares. I took a lot of my profit on Alibaba with this rip up. Let's go back to Alibaba here. So when we had this run, I took off most of my profit on the long shares. When this came back down, I didn't reestablish a new trade. I just didn't. It actually hit my measured move. If you go back to my chart here, like, this was my plan, is to try to get swing to swing, and that level was hit and exceeded. So by the time we got to like 127, 128, I was taking profit. Would I want to restart? I mean, I think Baidu looks a little bit better as far as reward to risk. I just want to see this thing catch some love and try to get back to like 116. So my covered calls have to be coming up expiration wise pretty soon. Yeah, next week. So 95 covered call. I've got about 77% of that credit. I'm probably going to leave this uncovered. I mean, it's tempting always to like add more covered calls. But if the stock has upside potential, which I think it does, getting too aggressive, I mean, especially with the ability to run, $5, $10, $15 in a week, there's no way that a covered call is going to be able to give me the profit that I want. So I'm better off letting this thing hopefully have another surge to the upside and considering like a 105 exit, or maybe up here towards 115. The nice thing about this stock is, I think if I gave this one enough time, if we can sort through this US-China trade war stuff, I think going through, I don't know how long it takes, but I think this could be $150 to $160 stock. So my ownership price is around $80. So, I mean, of course, I'd love to have some exposure there, where a stock that I have, a fair amount of shares. I don't know what it is. It's probably over 1,000 shares. Let's ballpark it. So 150, 230, 20, 150, 131, 100, 131, 131, 150, 40, 20, and 20. So 1,274 stocks. If I can get, let's say, $80 a share or $80 a share, that's a lot of money on Baidu portfolio. So, is it going to happen this year? Probably not. But even if I could take a fraction of that, I'm still looking at, turning a profit, and hopefully a big profit. So that's, one of my willing exposure trades on China is I like Alibaba, I like Baidu. I think there's some good technical upside to both of them. K-Web, the other one I have is JD. This one at 33.91. I still have some calls on this one out to $40. These are coming to expiration shortly as well. Robinhood. Are you serious, dude? Do not get back below $54 today, Robinhood, you piece of crap. What's JD right here? Covered calls next week. Yep. So these are going to expire also next week. So I'll be adding those to the mix as far as some additional prune trades, adding some more covered calls, maybe letting it run uncovered, but we do have earnings coming up next week. So hopefully JD pops on earnings. I don't really want to cover it unless it's after earnings and it's positive. I think I have a downside protection. Got naked puts on this one as well, up about 6%. This isn't bad. But I sold these puts way, way down there when price was elevated and volatility was really high. This wouldn't be a bad winner though. About 60% wins on the max credit. Anyway, so I'll keep an eye on that one. Schwab dividend, fine. Schwab growth, fine. If you want to play, I've talked about this the last couple of weeks. If you want to play NASDAQ in a cheap way, SCHG is not a bad way to trade it. If you want some non-US exposure, SCHY. Trade Europe, trade China, or Asia. So that's not a bad dividend. It's not a bad, we got dividends, growth, and non-US. That's a nice way to kind of diversify for this year. I'm playing those out with some owned shares. How many stocks above the 50-day? Well, we just had a run up to about 67% of stocks above the 50-day. Now it's pulling back a little bit. How many stocks are above the 200-day? About 58% of stocks are below the 200-day moving average, and we got about 42% above. So we're still kind of in that no man's land. A lot of stocks kind of retracing, correcting back to the 200 moving average. Will that act as resistance in the near term? NASDAQ above the 50-day has had a pretty nice recovery as well. Do you remember talking about timing the market down here? It's one of now many examples where if you're paying attention to this NDFI, this is how many stocks are above the 50-day. When this thing is beat down to a pulp, it's a good time to look to buy. So if you're courageous enough to trade in a high VIX environment, you can get rewarded pretty well with these reflexive moves. Timing the market 2023, timing the market 2022, timing the market during COVID, timing the market now worked out pretty well. Like literally this thing flagged a trade. In my opinion, this was right here at this like April 7, April 8th. Like that was the bottom. I don't know what other timing indicator you want, but that was pretty darn good. So between NDFI, S5FI, same thing. You had a opportunity in that 2 or 3 day window to be long. I mean, nobody knew that Trump was going to tweet and talk about, great time to buy and the market's going to rip up, 9%, 10% in a day. But that timing indicator for a 30-day window is pretty darn good. Costco, fine. Walmart pulling back a little bit. I've got some shares on Walmart playing defense. Nike, fine. I've got some puts on this one. Home Depot still waiting. If we come back down to fresh, not fresh lows, but recent support levels. Lows, same thing. MasterCard. Consumers are still pretty darn resilient. My MasterCard, Visa, and Amex trades actually worked out pretty well. Closed out these ratio spreads for profit. Johnson & Johnson. Actually, this one I can close out today. CB I can close today. I'm up like 98% of the max credit here. So CB, here's an example. So 111, 111. And this account, 111. There. So I pulled in $2.01, $2.01, $2.01. I'm up 99.8%. I mean, I should be able to close this thing down for literally like a 1 cent debit. Let's see 10 cents debit. I'm going to keep the profit. So this expires next Friday. I doubt we're coming all the way back to 215. So I'll just let this expire next week versus closing it now. I don't want to lose $10 on it. Might as well keep it. But good trade on CB. What else? Palantir, just off the highs. We had an earnings play where earnings was positive, but a gap lower, trying to fill that gap. This could be a little bit of a top, hitting resistance, gaps lower. I could see some major profit taking on Palantir. Again, another one to just watch a big range. If Palantir came back down to these lows, I'd love to get some more exposure there. I put in a ratio spread. I'm willing to own some Palantir. If we come down to some, high volatility, I will sell some cash secured puts as well. Similar to what I did this year when we were, dipping hard in February and March. This thing turned, aggressive in February. So when we were falling aggressively, I was selling puts. We bottomed out in April. I had ratio spreads. Those worked out okay. Carvana also resistance. Don't be surprised if this one has some resistance. If it came back down to these lows, I would maybe, leave a dip. I think Palantir is probably a better stock overall than Carvana. CRM for Salesforce. O'Reilly kind of topped out here. I looked at a call condor trade that would have been pretty nice. It was a high risk to low reward, which I didn't love, which I didn't take the trade. But still, top was in. Redfin sideways. Zillow. We had earnings this weekend. Zillow still pretty quiet price action. Uber. So we had earnings on Uber. We had a miss in revenue, but stock price hasn't done much. I still have a ratio spread here. I think I took profit on that. I don't have running in the portfolio anymore. Nope. So I'm just going to be patient. I do have some shares of Lyft. Oh, hello, Lyft. That's freaking sweet. So Lyft is now crushing it, and that's a great little move there. So Lyft, where are you? There we go. About up $6 grand Lyft. Got a lot of shares, and my put is pretty much worthless. So I could probably just bail on that put. But yeah, I mean, I added a lot of shares on Lyft around $11.79. Let's see if this thing gets some legs to the upside. I would be excited on, I mean, even a miss in revenue didn't matter. It's like squeeze to the upside. So hopefully we are heading back into, $18, $19, $20. To me, that's good enough for profit. I'm not looking to hold this thing long term. But if we get back to, I mean, maybe at the conservative side, maybe a lower high. But I'd like to see if we can run up into, maybe another $1 to $2 of gains. And I'll probably take some profit. So it'll be close. That's not too bad. So how many shares do I have total? 100, 100, 200, 200. So 1,600 shares. If I get another $1 movement, right? So it'd be another $1,600 on top of the 61. So 6,100, another 1,600. Yeah, if I'm getting close to like 8 grand, I might take some profit. Also, before I just dump the shares, I could also just sell a covered call on everything and try to get a little extra premium as well. So if we come up to, let's say 17 and change, maybe I can throw on like a $17 or $18 covered call, grab a little bit more premium, and just let it get called away and kind of juice those profits a little bit. So nice little surprise on Lyft. Sector-wise, I think XLV is the only one that I have right now. This is healthcare. I've got a ratio spread on healthcare. I did some energy as well. I mean, I wouldn't mind doing some puts on energy, but I don't think I have it. I think the only sector I have is XLV. That's it. And then I've got Pfizer. We had the pharma tariffs announced. Funny how the market just had all this crazy wild news this week of like, hey, tariffs on pharma, tariffs on Hollywood. Good time to buy this. The market's going to skyrocket. It's like, just, I guess you want to listen to the president. He's telling you what to do. Maybe it's that simple. Maybe we truly have an insider right now who is president of the United States just telling us what to do. And Pfizer, man, let's go currencies. Currency strength, anything surprising? Not really. Still pretty quiet on the Forex side. Japanese yen strong today. Aussie CAD. I'm still long Aussie CAD. If we get a pullback to 87.50 or so, I'll probably buy some more. Aussie Swiss. Still waiting for a better bottom. If it just melts up to the highs, that's fine. I'll take some profit. I've got my break even down here towards around 52.87. Aussie yen, there is a trend line here. If you had the ability to buy that August 5th bottom and not get beat up too badly from that flashy move, we could also be putting in a like this low, could realistically give us some type of structure pattern where the Aussie yen does come back to these highs. If we have risk appetite, I think on the right hand side of this trend line, Aussie yen does look like a swing trade to the upside. Aussie New Zealand, I am still long on this one. Aussie dollar, I'm waiting for a deeper pullback. No trade. CAD Swiss, I'm still long. Here's my break even around 6,100. I'd like to consider maybe some profits up here on the conservative side, but if we go maybe a move like this, this might be seen as one swing. So this is one swing and then a pullback, another swing. I'd like to be taking profit up here towards around 63, 6,400. So I'll hang out for that one. CAD yen, Swiss yen, leave those alone. Euro Aussie, no trade. Euro CAD. I mean, if you're willing to hold this one, I think we get back down to 54. Euro Swiss, I'm holding on to this one, trying to get back towards 96 and change. Euro pound, no trade. Euro yen, no trade. Euro New Zealand, same as Euro Aussie. I'm just staying out of it for right now. Euro dollar, if you're short, I'd say at 111.50 to 110.50 is a good profit target if you're short. Pound Aussie, in the near term, if you're going up to this level, maybe you're on 2.1, taking some profit. If you're long, pound CAD, I'd wait for some confirmation here, but if we come up to highs, this is a good resistance zone to look for rejection. I can see pound CAD hitting some resistance at 86, 8,700 and selling off. Pound Swiss, I still like this trade if you're, long in here, targeting this pocket or this pocket, still have some upside of about 200 to 300 pips. Pound yen, pound New Zealand, pound dollar, staying out of those. New Zealand CAD, I'm still long. I'm looking for a dip. If we have a pullback into here, I'm looking for a swing trade back to the highs. New Zealand Swiss, break even, so I'm in profit. Potentially a short-term profit level here, but if this gets up to a swing, pulls back, I'm looking for a three-wave move. I'll measure that symmetry, end up taking some profit. These are all buy stops, by the way. These have not been filled. So if we are going here, here, and here, I'm going to take all these buy stops, cancel them, and probably just dollar cost average into another swing and try to make this position a little bit bigger, trade that up into symmetry, and then take a nice chunk of profit. I don't think I'm going to hang on to this thing up to 56. Three-wave symmetry is good enough for me. But I'm still waiting to see, maybe we come back down and revisit the lows, but I'm looking for that bottoming pattern. New Zealand yen, maybe keep an eye on this one in case we break a trend line. Same thing as Euro Aussie, maybe, or Aussie yen rather. If we come up here and have a bottom, like a bottom head and shoulders or bottom crown, maybe this is a risk on trade, right? I mean, if we put in a low, a swing trade, it's like as long as we don't take out this bottom, then this trade should hopefully hang in there and maybe fight through this 200 moving average and get back up to range highs. So not too bad. New Zealand dollar, pulling back a little bit. If you're, eager to dollar cost average, stay small. Trade 1, trade 2, trade 3, trade 4, like kind of level into it. I don't think we come necessarily lower than this level, so that's good. So, but if you trade small, even getting into open space, any higher highs would look pretty good. Dollar CAD, finally starting to see some more movement. I'm not in dollar CAD at all. This area is very noisy. So, if you're long dollar CAD, okay, cool. I don't love it as much. So I'm just stay out of that one. Dollar Swiss ish kind of a comeback, maybe, not really. Probably better on the right-hand side of the trend line. I'm looking to see if I can get my dollar Swiss back to 8,800. If I can measure a move here, let's say this is, down, pause, maybe down again, look for some divergence. We start to get a bottoming pattern, and I'll trade some type of symmetry trade, back to like 88. If we get back to like 92, awesome. I'd be a huge profit back here as well. But I'm just kind of patiently waiting and riding out some of these Swiss pairs. Dollar yen, same thing. As long as we don't do too much damage below this low, this could still be choppy, but still resilient enough to get back to like 148, 149. It might also surprise everybody to the upside and come up to like 155 or 156. But if you're long dollar yen, this is probably a safe way to be at least eliminating risk. If it goes higher than that, yippee skippy. Okay. Any charts, any requests for today? S&P is still kind of, everything's kind of red just a little bit, just barely. So, flat on the day. S&P is literally at 0, NDX at 0.03, Qs are flat, Dow is down 0.2, Russell down 0.06. So overall, like, still pretty quiet. Yeah, just a quiet Friday. I'm okay with that, in all honesty. I'm creeping up to that 200K mark again, which is where my high for the year was 205. So I'm up about 193K, and hopefully able to cross, 205, 210. Income trades and things that I'm looking to participate in. I saw a lot of cash looking to deploy. I'm just trying to find good opportunities. But yeah, we'll see. Doing my best to just keep taking good trades. So any requests, any charts, I'll give you a couple minutes. But that was all currencies, indexes, US, non-US, Bitcoin, gold, silver, oil, a little bit of everything. But the nice thing about what I'm seeing right now in the market is, let me go back to here's SPX on the day. If we go back to the bigger picture, is I'm a little bit more encouraged to watch this area for a dip. If buyers have been left behind because they didn't time the market very well with that April sell-off, I do think that buy the dip if we're offered up a pullback. This could be seen as a good entry to then get back to this neckline, break this neckline, measure this move out. We hit all-time highs. I'd be less likely to sell. If we hit all-time highs, I'm less likely to sell. So I'm just hoping we get a chance to participate in what could be a dip to then make a run to higher highs. And of course, then this resistance becomes support, and we could run into. I do think we're running into like a big old bubble at some point. But it's the same crap we dealt with since 2018. We've had bubble after bubble after bubble. Market goes up, it crashes, works its way back up, crashes, works its way back up, crashes. I mean, this was the peak in 2018, crash, 2019, crash, 2020, crash, 2022, bear market, right? 2023, 24, 25, crash. So we just keep going in these wild and crazy phases. We've technically had like 7 bear markets in 7 or 8 years, based on the market correcting at least like 20%. That's crazy, but sign of the times, and I guess that's the new normal. So, all right, gold. Yep, we did gold earlier. I think gold's just range bound. So if you're a perma buyer on gold, be patient. I haven't added a single trade to gold. I'm still holding the long-term trend. I still have a lot of GLD running. If gold pulls back to, I like 3,000 a lot. I like 2,800 a ton. I just don't know if I'm going to get much more than just a little consolidation here. So if you're getting eager to trade gold, like trade it small, couple levels, and we're probably still heading up to highs. If the world is making a rotation away from the dollar, you're probably going to see it reflected in gold. I think the only the issue that gold has as far as headwinds is if these stock markets are going to go higher. If stock markets go higher, if Bitcoin goes higher, I think gold probably loses a little bit of its bullish momentum, because this was running based on fear, right? This is running based on uncertainty. So I think if we get a little bit more risk appetite in the markets, you're probably going to see gold go sideways, if not pull back. Oil, your guess is as good as mine. Oil, we're holding this April 9th low. I just think if you're looking at gold or looking at oil, honestly, maybe like another strangle trade. I don't love doing this because it's undefined risk, but gosh, I feel like just selling some premium or some iron condors on oil is probably better than anything, just because I don't know what it's going to do. Like, I don't know if it's going to be choppy in here. But I would just have defined risk. If you could pull in 30% of the width of an iron condor, that's not a bad trade. But it's still kind of range bound. Pakistan, yeah, or don't trade it. If you don't want the exposure of any type of war conflict or OPEC or Saudi Arabia, US supply gluts, don't trade oil. It's challenging. I did add some trades here, so we're back to 1893 on UNG. I might end up rolling this thing. I actually, for another one, income wise, I did this yesterday, so I now have a diagonal that's a 5x19. I'm up about $700. It may get called away. This is May 21st, but I'm also going to roll this a little bit if I can. I'll try to roll it a couple of times if we're making a run back above 19, 20 bucks. So initially I had this up to 23. I rolled it down to 18, 19 to get some credit. I can roll it out again. I've got plenty of time on the long side of the trade, but we might just be sitting here looking at choppiness around the 200 moving average. The Tesla run, I mean, I think this is probably encouraging. Tesla up above this resistance at 295 looks encouraging. I certainly don't like buying highs on Tesla, but you never know. So what I do have is I have shares of Tesla. I'm selling calls. I've got ratio spreads. I'm not crazy bullish on this because unless the markets are going to rip, I don't think Tesla just runs all by itself. But I will say that if we just, even if we go sideways here above the 200 moving average, I'm just going to keep selling calls against what I own. So but position wise, I do like Tesla. I mean, we're through a terrible earnings season. The market's recovered off the April 8th bottom. And, on the right hand side of the trend line, after the stock is down 50+%, I mean, we're probably pulling back into this area to maybe the 315, 320 zone. That's probably the next level of resistance. And from there, I would hope we have a pullback. If we have a, break, retest, and go find some support resistance, maybe another pullback in here, I'd love a chance to scoop up some Tesla, maybe 270, 280 again. And that'd be more of like a core position to see if we can get a run. So, Tesla is a highly traded, very liquid stock, tons of options. So I don't mind it. I think on the right-hand side of the trend line certainly looks better than, everyone hates Elon Musk and people are vandalizing Teslas, and it's, just treated like it's just sentiment. It was a sentiment-driven stock, but starting to recover a little bit. Okay, I think that's it for me. I'll wrap it up there. Have a great weekend. See you, everybody. Take care. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the EdgeFinder 40% off, our best discount of the year. Check out the links in the description below to visit the EdgeFinder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.